Coin traders, how's it going? Algo fam, how we doing? Thanks for joining me for the show. Looking at Algorand ALGO on that ticker. Going to start off on the daily right now. Currently, we're looking just below the 25-cent psychological. So a big point of price that we're going to be looking at right now. And what's also significant about this level too is that it's lining pretty much right in line with this 26-period exponential moving average, which actually is sitting at 26.86. But if I zoom out, and this is the only exponential moving average turned on right now, and you can see that this is the only one that's actually relevant in terms of finding a very nice support point on all of these retracements and pullbacks. So every single time we have seen prices run up, pull back to 26, rally up, pull back to 26, rally up, pull back to 26. So that's kind of another reason right now why this is such a big key and critical point. So also if we flip over, for example, into the, I believe it's the 4-hour, probably highlights this the best. You can see how the 25 cents actually one of the nice points for closing level of support, actually slightly above that. So looking at right now in the current breaking below that, so that could be an extreme. So that's likely going to end up being an indication of a lot more downside pressure breaking that 25-cent psychological, since we have broken above it on the initial move back in the beginning of the month. So do just want to say a quick welcome to everyone new. If you have been enjoying any of the videos, hit the subscribe button and also the thumbs up like button as well, so you can stay updated on all future content like this, especially on Algorand. And so now, unfortunately, the candle that closed a couple days ago is actually the biggest magnitude that we have seen since, I believe, right around the time of the FTX crash. So we had a pullback pretty substantial of over double digits, looking at 12.26% on the day. And so zooming out right now, do want to go ahead and talk about current price points, because where they align right now, not only in terms of the exponential moving average, but also in terms of a big prior resistance. So if we look left over here, let's actually go ahead and zoom in on this section over here, because you can see just what a big level of closing resistance this was once it did in fact break. So you can see even coming off the FTX crash, very nice level of support. And for this level, we are looking just under the 25 cent at 24.79. So ideally, we would be holding this level as a very nice support, since it was that big resistance on that move before. But if you can see, this whole level is actually pretty relevant. And let's go ahead and turn on the volume profile visible range here and actually look at some of the recent mass in terms of volume. And let's actually zoom out a little bit more as well to get the price points included. So if we actually look over on the right-hand side, you can see that the biggest chunks of mass is sitting just below where the current price is right now, basically from about 24.5 cents all the way down to about 23.5 cents. So this whole zone, I do expect to be extremely supportive, but there are a lot of bearish things to be watching out for right now. So that's not necessarily going to mean that we can't just go straight down, right? It's not what I expect anyway. But given the current situation and the shorter term patterns, which we'll talk about in a second, it does seem all the more likely like we are going to be looking at a temporary top in right now anyway for the time being, which was that resistance point just shy of the 30-cent level at a top coming in at 29.88. So if we flip on over to the 4-hour chart right now, and you can see right now that we are defending still on a close on this 4-hour, the 25-cent line. So if this level does get defended, then pretty much that's going to be the big trigger that we're going to need to allow a lot more upside pressure from the bulls. But if that does break, in fact, like we talked about, then that's going to trigger a lot more bearish price action. So really, over the short term, it's all going to come down to whether or not this 25-cent psychological level can ultimately end up holding. The longer it does end up taking to actually see a substantial bounce and showing a little bit of upside pressure from this level, the more the likelihood of a downside retracement is going to actually happen and see farther downside prices. So really what we do need to see is the overall crypto space to get a little bit more volume momentum and seeing a little bit more price action to the upside. But overall, in the shorter term, the markets have actually been lagging a little bit. And if we take a look at Bitcoin right now, you can see that, especially on the shorter term anyway, we're looking at a rising wedge on the shorter term, which is typically a bearish sign. And so especially looking on Bitcoin, the fact that we do have a lot of resistances overhead, most notably just around 21,700, which we can see looking left, big point of support on this initial bounce before recently we just flushed below it. So now seeing a little bit more of this rising wedge and even a bear flag type pattern. Looking at the volume as well, minimal volume, so not really expecting any sort of sustainability on this little upside move. So because we actually are expecting and anticipating a little bit more bearish pressure in the coming days and on the shorter time frame charts here, that does mean that we're expecting that a little bit more on the altcoin charts as well. Now, one of the things that just occurred with Bitcoin as well is that we did break support on some of the price points to actually change the trend. So that does likely mean that this top is going to be set for the trend local high. So as such, on this pullback, we do expect a little bit more consolidation. So even if we do get a little bounce to play out, that needs to sustain. And like we said, the longer that it does take to actually reverse this trend, the more the likelihood this does turn into a downside continuation pattern. And then we end up retesting this and breaking that price point to just lower lows. So if the bulls do want any sort of chance to actually start to change the trend, have this be a low and start to see prices gaining to the upside, it does need to occur pretty quick. Because like we said, otherwise that will mean that this will probably just turn into a continuation pattern that the bears will end up reclaiming and taking control of. On a lot of these recent pullbacks, though, on this 4-hour chart, we have ended up seeing a little bit of this kind of double bottom formation before we see the next leg to the upside. So a pullback, a little bit of a double bottom again, next leg to the upside. So if that is what we're seeing now, where we do have a little bit more of that double bottom, that could be the sign that we need to see our next leg to the upside if that pattern also does continue to play out. However, if we are looking at this as being a trend that we're following, unfortunately, we have broken lower lows here, since our most recent low on this candle and pullback was coming in at 25.08, which we have in fact broken both times. So personally, I think even if we do get a little bit of growth, we are going to see a little bit more of that upside resistance coming in just shy of the 25.5 cent mark at 25.46. But if we do flip over into the 15-minute time frame right now, that doesn't seem like an unrealistic target, especially if we do look at kind of an overall downtrend happening right now. Flipping over into the 2-day chart now, one of our favorites, and we kind of switched the 12 period for the 26. So we're looking at the 12 period exponential moving average right now is being our guide, which we did have a lot of touches and tests against. And then right now that also intersects pretty well with the 25-cent psychological, which is where we did find a lot of that resistance previously, like we talked about. So this is going to be a very good level 4 indication. And one of the things that I wanted to highlight the most on this 2-day chart is that before we had this recent bearish candle that closed, we were actually looking at a very nice green, red, green bullish engulfing candle pattern, which actually kind of now flipped since we have seen the most recent bearish candle completely engulf the most recent and largest bullish candle. So again, this is pretty much a topping signal, especially when we talk about the size of this upper wick. Now, we only have about a day left on this overall candle, so I do expect it to either come in bearish, which will be the first time we've seen 2 consecutive 2-day bearish candles since before when we did find just before our finding our bottom. But if we do find a little bit more upside pressure, it's pretty much almost going to be guaranteed that it's not going to be the size and magnitude of the body that we saw for the bearish candle that closed previously. So as such, that will still remain in effect, that this is going to be a little bit more of a bearish setup and a little bit more of that topping signal. So we're starting to see the bearish signs just stack up more and more and more. Now, what this really means is that if we look at some of the longer charts, like the weekly, for example, we can already see that if we just look at this volume, for instance, that we had a decrease in week over week bullish volume, but yet just in the 2 weeks, we have had increasing bearish volume. And especially with a giant, massive upper wick, that does indicate a lot more bearish downside pressure. But the reason that's not necessarily a bad thing for the longer term trend is that we've had week over week higher lows for basically the last 7 candles that we've seen, to include the current one. So on the longer term trend, it's extremely likely that we're going to pull back and set a higher low. It's just pretty much a matter of what the downside target would be in that instance if we do in fact break that 25-cent psychological for support. I think if we can maintain that level as support, if we do zoom in on this chart anyway, you can see that the recent bullish candle that closed for the weekly so far engulfs both bearish candles, despite them being much bigger in volume. So that's actually a little bit more of a bullish sign for a continuation, especially maintaining that 25-cent psychological level. So that's another reason why we're focused so heavily on maintaining this 25-cent psychological level, because if that does happen, then we're pretty much confirming this level as an established support and allowing the bulls to then follow on and see the next big leg to the upside to confirm that these 2 weeks of bearish pullback aren't going to be sustainable and lead to any more downside targets. But if we do still end up pulling back, that's not necessarily the worst sign, because like we said, we do have a long way to go before pulling back and actually setting a new lower low. So if we look at Fibonacci's, for example, from the low down at our 16-cent level, or just below that at 15.99, up to our trend high right at the 30-cent mark, or just below that, the 25-cent isn't too far from where we're seeing the 38.2% retracement, which currently is at 24.63. Now, just below that's the 50%, which isn't technically a Fibonacci retracement level, but nonetheless, we do still use it as a guide in a lot of situations, and that's pretty much right at the 23-cent mark. Beyond that, to the downside, 61.8, excuse me, 21.35 cents. And then below that to our extreme downside support would be 78.6% retracement right at the 19-cent level. In all of these situations, we still could pull back to that level and maintain that higher low. So even from current price points down to the 78.6 would still be about a 24% retracement. And I think that's definitely a reasonable target and expectation, especially if we do break those levels and Bitcoin breaks some of its supports as well. Because typically what we find on a lot of these big upside moves, especially during a bear market, is that we get retracements that go almost all the way to the bottom where we found our initial support. Typically, this does create a lot of panic, but this is the opportunity to actually prove and confirm that the bottom is in. So if we can actually establish this on a retracement and pullback, especially the closer we get to it, that is all that much more and better of a sign that the bottom is in and that we are going to be changing the trend in that instance. Because typically, if we don't have that happen and we pull back just a small amount, say to the 22-cent, and then continue on and actually see new higher highs, that might be good for short-term price growth, but that's not really enough to actually establish a confirmation, just since knocking out a higher high is a little bit easier in that instance than actually seeing the bears be in control almost all the way to the bottom and then having the bulls defend this big support level. That's really what ends up confirming the end of a bear market when we do see huge retracements after these little bounce upside moves, and then being able to set a new higher high in that instance, just because that's confirmation and proof that this amount of bullish upside is able to happen twice. If this concept doesn't really make sense, drop me a note down below, and I'd be more than happy to try to explain it again. Now, another thing that I noticed on this weekly chart, and let's actually go ahead and get rid of the price line, is that if we actually look at the exponential moving average, which is still the 12-period EMA on this weekly, you can see that the most recent 4 weekly candles have been finding closing support on top this 12-period EMA. So again, that's another reason why we're going to look as this being a guide to see a little bit more of that price stability and stabilization. So for that, on this chart, we're looking at 24.59 cents. So really, we're going to know here before too long if it is likely and probable that we'll be able to see the bulls defending that 25-cent psychological level for support, or whether or not a lot more of these bearish downside signals will happen, and we'll be testing some of these lower Fibonacci support levels and some of the lower price levels that were previous resistance. There's a lot to cover from a chart perspective for this right now with Algo, so sorry we didn't get to cover any of the recent announcements regarding some of the foundational partnerships with India and the Clinton Foundation and things like that. Do head on over to Twitter, though, if you do want to talk about that and discuss a little bit further. @coin_trades is the handle. See you over there. But otherwise, we are going to wrap up the show for today. So if you do have any questions, comments, issues, disagreements, all that stuff about anything that was said or anything about the content today, let me know in the comments sections down below. Do love getting back to each and every one of you. If you did enjoy the content today, please hit the thumbs up and let me know by subscribing as well if you haven't done so just yet. But otherwise, thanks again for all the continued love and support. It does mean so much. Stay safe in these conditions. Take care, and I will catch you back in the next video.